let's look at the total US stock market. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. Okay, we have some rally in the market today, and this is the last day with Trump in office. It's been a huge run for the stock markets, and we will look at a very interesting ETF, which is called the VTI. That's the total US stock market ETF. So this gives us, the really, bigger picture of what is happening to US securities. So 81% gain from the 52-week low, pretty close to highs. So certainly been a very strong rally. Let's first look at the seasonality. So VTI, not to be confused with the VT. The VT is for the total world, global stock market. But here is the seasonality, and yes, January is historically the weakest month. Even if we go back in time, between 1999 to 2018, the same message. You see that seasonality does get stronger heading into April, but this month is weak, okay? But let's explore further. So here we have the big chart in front of us. So we can go, pretty far back. So this is all the history we have for VTI. So 243% gain total. So there are some things that stick out. So this is literally all the history we have. And the current RSI levels on the weekly is one of the highest we have had. Hence, if you look at the history, this is a high risk place. If we look at the PPO, which calculates the distance between price and the 200-point moving average, in this case, the 200-week moving average, we are currently at one of the highest levels. Historically, it's been a risky place, which tends to trigger pullbacks. Let's, do some other, historical studies, because the history of security can tell us a lot about its future development. So now we are measuring from the last time we tested the 200-week moving average to the top, okay? And we can also look at this one as well, like that, to around there, and we can do it like this. There to the recent high. Okay, so in this time frame, we used 952 days to gain 63.6%. Okay, here we use 413 days to travel 43%, but now we have used 287 days to travel 81%. So hence, this rally here, the latest one, is vastly more euphoric than the previous rallies. Okay, that's a fact. Here is one of the classic quotes in finance. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. So based on what we have looked at so far, there certainly is some euphoric aspect to this recent rally. Okay, so bulls are in control, but historically this is a high risk situation here for the bulls. You can see that there's a almost perfect correlation with S&P 500, which is not a huge shock. Let's look at the daily data points. Let's go a bit further back in time here as well, because the more data we look at, the more the better analysis we can do. So these are now daily data points, and you can see here we are in the upper range of the RSI. And if we look here at the PPO, and now we are looking at the distance between price and the 200-day moving average, a key technical level, and this is one of the highest levels we have had in the entire history of this ETF. If you look at what happened in the past, there have been pullbacks. Okay, unsurprisingly, there's a very strong correlation with S&P 500. Okay, accumulation distribution, it is... we are seeing that there's strength in buyers, but the latest push here didn't see full corroboration. So there's some slight weakness, but no doubt about it. There's a lot of money going into securities. If you look at the VTI, look at these trend lines. We're way above the trend line. Options are available. It is shortable. Here you can see the performance. Something quite interesting is when you look at valuations. So if we compare the VTI, which is the US, big picture stock market ETF, with the FXI, which is the China large cap. If we calculate the difference between these, you see that the China ETF, thinking about it fundamentally, is trading at a minus 57% discount. So it's on sale. That's interesting. We're looking at the dividend. The dividend is also bigger here for the China ETF than this one. It's something just to think about, because it is all about buying low and selling high. So let's analyze the VTI a bit further. So here we can see the sector breakdown. We do have some pretty nice diversification. That's good. Unsurprisingly, the vast majority of securities are in America. And here you can see Apple, Microsoft, the classic big and well-known names. The number of holdings is 3,547%. Hence, it is definitively very, very diversified and gives you that real quite holistic picture here actually of American stock market. Hence, if we take the evidence together here, looking at it seasonally, the seasonality strongly suggested that we should expect some weakness. We are in a historically weak season. Given that the market is up a lot heading into this weaker season, and that the recent rally, as a matter of fact, has been quicker and sharper than the previous rallies, and there's good reason to think that there are bearish opportunities around the corner. The problem is that, problem for the bears is that the bulls are completely in, fear of missing out mode, FOMO as it's called. We see that we have some of the highest PPO and RSI levels we've seen in a long time. Historically, that has been high risk here for the bulls. The narrative reason why the stocks are continuing to go up now is because of you did have that blue wave, and you also had you have Janet Yellen, who is very dovish, and there's great expectations of more stimulus. The thing is that there are alternatives to America. You have China, you have Europe. There's many other places to put your money. And given that the market is at such a high level, very overvalued, and there's political risks on the horizon, there's a lot of talk about, seeking revenge on, Trumpism, which very likely could trigger more volatility for years to come, because there's an extreme level of distrust and resentment towards authorities, and that's something that's been building up very gradually. You can even look at the music genre, how it's way more rebellious now than it was when your parents grew up and your grandparents. So this breakdown of these structures of authority, that is something that can have very dramatic long-term implications, especially when you consider that the entire financial system is dependent on trust.